Political tensions between Ukraine and Russia may be fraying, but what are the knock-on effects for the supply and flow of oil and gas? Joining me from Paris today to discuss this very prominent topic is Dr. Thierry Bros. Dr. Thierry, thank you so much for joining us today.
Thank you. Thank you for having me on this program.
Not at all. It's a pleasure to speak to you on this topic. Now, if we talk about the flows of oil and gas between these regions, who are the main players here? What's at stake, would you say?
The main players, in fact, are Russia and Europe. Russia because it exports quite a lot of gas to Europe, and Europe because we need the gas. And in fact, the third player is Ukraine, but Ukraine is, in fact, a player that's slightly less important, should I say, if we look at the two main players, which are Russia and Europe. Just to give you a few numbers, I mean, Russia exports to Europe have achieved 63 billion euro last year in its revenues for Gazprom, and for Europe, Russian gas accounts for 26% of our total gas demand. So that's where the main players are. The third player is Ukraine. Ukraine is getting Russian gas, and Ukraine is also getting a transit fee from Russia for transiting this gas through to Europe, and the transit fee is around $3 billion for Ukraine.
Okay, now for the moment, are the flows being affected, Thierry?
No, the flows are not affected right now, and our base case scenario have been flows not to be affected. They've never been affected, even at the middle of the the Cold War. Interestingly enough, what we are seeing in terms of flow is slightly more flows coming from Russia those days, because you could assume that countries that are on the east side of Europe, i.e. Bulgaria or Romania, have in fact slightly increased their flow to be prepared in case there is some transit interruption. So in fact, right now, more transit flows into Ukraine to Europe.
That is very interesting. What about, in your opinion, are they likely to be affected? What about the prices as well?
I mean, as I said, our base case is those flows aren't going to be affected. I mean, as I said, Russia needs the money, Europe needs the gas. And again, if I look into Ukraine, if you're whatever party you are in Ukraine, you have a vested interest. The other thing that I can say is about prices. What we've seen in January and February are prices that went down 15% on the hub level in Europe. And yes, they did increase slightly back yesterday, but that's very slightly. It's a 7% increase, and they are still lower than they were back at the beginning of the year when we were in the plain winter. And third element, it's not only about flows, it's about demand, and it's also about storage. Demand in Europe is very weak in terms of gas demand.
Okay, and what about the worst case scenario, Thierry? What about if the relations were to deteriorate further? How would Russia and Europe be affected, do you think?
So the worst case scenario, again, not my base case, but yes, we have to look at it. Well, if you look at the numbers, you can say broadly that Europe will need this year 120 BCM of Russian gas. So how can you transit, how can you achieve this? Well, you have the historical pipes that are the Yamal that go through Belarus, 33 BCM capacity, and the pipes that go through Ukraine with a huge capacity, 120 BCM, that we assume is completely closed in your worst case scenario. So we have, first of all, we have the historical Yamal that go through Belarus, and this should continue to flow. Secondly, since 2011, Gazprom and its partners have built a new pipe, an offshore pipe that transit no countries, that goes directly from Russia into Germany. And this is a 55 BCM pipe. So you see 55 plus 63 equals 88. So we are not completely there. And again, there is some flexibility in the system. There is a few more little links that are allowing Russia to export either directly or either a bit more through Belarus. But if the worst case scenario were to come, then we will be short of something like 30 BCM of gas. 30 BCM of gas is quite a lot of gas. Remember, gas demand in Europe is around 450 BCM. And this is not going to be provided by alternative pipe suppliers. So the only way we will be able to achieve and to get those 30 BCM will be to go on the liquefied natural gas. And there we will need to fight versus the Asians that are now the ones that are buying this fuel, this LNG. And so therefore we will need to overpay or to pay higher prices than what it is today. And here the price is an important element. As I said, the prices went more or less down if we compare to the 1st of January, from the 1st of January to now after the crisis, in the middle of the crisis. Prices today are around $9 or $10 per million BTU. If we were to get this liquefied natural gas, then we will need to pay something like that is more around the $18, $19 per million BTU. So there will be a huge consequences on prices. But this is the worst of the worst scenario. Well,
as you said, the worst of the worst case scenarios there, Thierry. Thank you so much for sharing your insights with us today. It's been a pleasure. Thank you for joining us from Paris.
Thank you, Monica.
Thank you. Well, that's all from Thierry and myself for the moment. Make sure you click back to Dukascopy TV for many more exclusive interviews. Goodbye for now.